Hello everyone. Welcome to our Andria's Pitchfork webinar. A webinar that I haven't really presented for ages now, but someone asked for it, and I was quite curious. That it was quite weird. I mean, people don't really know it, and I was quite surprised. But yeah, since you wanted it, I decided to present it. Something extra that you might consider using, testing, up to you. So yeah, another indicator, a very rare one, a very, I mean, not widely used, but one of the most Asian ones, if I could say the word Asian for indicator, but yeah, you got my point. So I would really appreciate if someone could stick in the box where you can hear me loud and clear, just to make sure that you can hear me. There isn't any there is no technical issue, etc. So until I have a feedback, I will move on, and I will remind you our email address is webinars@hfm.com. So feel free to contact us anytime that you want. Okay. Me, Stuart, Kadir, the whole team is here to reply to any questions that you have. So feel free to contact us. Okay, so we'll go through the disclaimer warning, but I would really appreciate if someone could reply whether you can hear us loud and clear, guys. Okay, just to make sure that I'm not speaking to myself. By the way, this webinar has been recorded as usual, so you're gonna receive the recording within less than 24 hours. Okay. Yeah, so this material provides general market communication for informational purposes only and does not constitute an independent investment research. Nothing in this communication contains or should be considered as containing an investment advice or an investment recommendation or a solicitation of the purpose of buying or selling of any financial instrument. All information provided is gathered from reputable sources, and any information containing an indication of past performance is not a guarantee or reliable indicator of future performance. Users acknowledge that an investment leveraged product is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which the users are solely responsible and liable. We assume no liability for any loss arising from any investment made based on information provided in this communication. This communication must not be reproduced or further distributed without our prior written permission. Trading leveraged products such as forex and derivatives may not be suitable for all investors, as they carry a high degree of risk to your capital. Please ensure that you fully understand the risk involved and take into account your investment objectives and level of experience before trading. And if necessary, seek independent advice. You can find the full disclosure, risk disclosure on our website, along with all the legal documentation that you might need. Guys, I would really like someone to reply whether you can hear me loud and clear. I don't have any feedback on the question box, and I'm start worrying that no one is really here or no one can hear me or something. Anyone? Can someone quickly reply whether you can hear me loud and clear? Anyone? Oh, either something's going on or I don't know, the sound looks okay. Guys, can anyone reply me whether you can hear me loud and clear? Hello? Oh, guys, I can see that there are a lot of people here. Islam. Someone raised his Abdul Salam. You can speak to me there in our question box. I can see that you have thumbs up. You raise your hand up. There is a question box at the bottom. You can ask anything you want. Mark, Paul, Raymond, can someone reply that you can hear me, guys? Kidan, Brian, Diana, Emeka. No? Maybe a mistake or something's going on. And you all Guys, can you hear me? Hello, anyone? Okay, because no one is really replying. I will for a confirmation from Kader. Just give me a second to find the link. It's the very first time that this is happening. Okay, so where are you? Okay. Team, anyone? Okay, I will wait for Kader's reply then. Guys, I'm waiting for someone to reply whether you can hear me, whether everything is okay. Can someone reply, sticks in the question box, whether you can hear me or not? That's a bit weird. Anyone? Everything seems okay. I can see that I'm sharing my screen. I can see that the sound is okay, but I don't have anyone to reply. We can't hear anything. Is it on our end? Oh, Adrian reply. Idea, give me a second to check. So something's going on indeed. The audio. Hello, hello. No, okay. I will log out and log in again then. Because I can see that it captures their sound. Yes, can you log out? Guys, can you hear me now? What about now? Oh God, thank God. So it's fixed, right? Guys, can you hear me now? Andrian, you replied, you said you couldn't hear me. Can you hear me now? Oh God, so okay, I don't know what happened, but okay, perfect. So that was a bit weird. It was showing that it was capturing some sound, but okay, thank you guys. Thank you all for the feedback. Thank you, Kader, for the help. Okay, thank God I didn't start it. Yeah, so today we're gonna go through Andria's Pitchfork, a bit of a very, it's not the popular indicator, but a friend and a client has asked for it, so I was obliged to present it. It's very interesting, but it's yeah, it's not so commonly used from people, maybe because they don't know it. Who knows? But yeah, it's just to give you another idea, another idea or something that you might want to try on. So what we're going to cover, see a bit of a Andria's Pitchfork indicator background, what it is, how it can be used, setting up the Pitchfork as well on a chart to see how what signals it's giving you, where does it point into a bullish signal, a bearish signal, a no entry signal, a stop loss. So it helps. It's like a range. So maybe this might be a reason why it's not so popular, because we have other indicators that are using range, such as Bollinger Bands, channels, etc. So it's the mentality behind it is on the is the mentality is that is a bunch of trend lines, identifying trends, identifying channels, and giving you some support and resistance levels, etc. So you can identify a trend, you can monitor a trend, you can participate in a trend, or identify a reversal of a trend using Andrew's Pitchfork. Okay, so we're gonna see how you can use it in order to enter the market. So a bit of a background. It's a very simple webinar today, guys. Very straightforward, and it might be a bit short because Andrew's Pitchfork is such a straightforward indicator. So it has been developed back in 1980. So we could say that it's quite new. Yeah, developed by Alan Andrews, more precisely. And it used to be my very first webinar ever. So I picked it because it has the same name as myself. So yeah, it was developed by Alan Andrews, and pretty much it's a channel tool. It's a trend channel tool. So as you can see over here, it looks like a fork. It looks like a pitchfork. Can you see that? So it contains three lines: a median line and two parallel ones, one on the top, one on the bottom, which suggest that we have the start of a channel. But as you can see, the middle line starts way before the actual channel confirms. Okay, so it looks like it consisted by 3 points, 3 lines, and 3 points, I would say. Okay, A, B, C. A is the beginning of the middle line, and B and C are the two edges, which are the indication that we might see a channel being developed. Okay, so before we see everything in detail, oops, sorry, just a bit of a background. Mr. Alan Andrews, Dr. Alan Andrews more precisely, created this indicator because he wanted to be able to detect and border the deviation of the market. So he was a trader himself. So he wanted to improve deal with the leakage of markets from the core of the trend, and that's why he figured out this way. He created his own indicator. Okay, so it's a method. It's a method of identifying trends and reversals and channels. And it can be also provides momentum. So Andrew's Pitchfork can provide momentum traders a signal either in the long term or medium trend, where it's most useful in predicting more protracted market swings. So it could be used for momentum traders as well, but we're gonna see all this in a second. Okay, so let's move on. Okay, so okay, some background of Mr. Alan Andrews. He was a businessman. Sorry, he was as I said, he was a trader himself, and he was a mathematician, if I'm not mistaken. But further back, before Mr. Andrews developed the Andrews Pitchfork, the background, if we could say, of Pitchfork indicator is based on Newton's laws. Okay, That's why it takes us back to the businessman called Roger Batson, and the chart is called George Marechal, which were the very, very first people that indicated, more precisely, the chart is George Marechal, that indicated that created or gave us that the middle line is a clear deviation of Batson normal line. So normal line that we use, a trend line that we use in the charts is based on the Newton's law, okay? And so Mr. Andrews based its indicator on the Newton's laws, on the normal line created by Batson, on the fact that median line is a deviation of the normal line. So in those two ideas, in order to develop what we now know Pitchfork, and in general what we now know the upper and lower parallels, which are widely used in the financial markets. Okay, so that's just a bit of a background. It's not something that you should remember. So let's go to the most interesting part of our webinar. Okay, so I already mentioned that it can help you identify possible market reversal, market trends, and the most important of all, triggered levels that could help you identify when is the best time to enter the market, right? This is what matters the most, to identify the best time to enter the market. So, okay. First of all, in order to identify and to use, actually, in order to use this technical indicator, it requires, okay, to spot 3 points in the charts. Where I'm referring to? Okay, so in order to develop Andrews Pitchfork, we need, I will take a step backwards, we need 3 levels. A, which presents the start of a trend, then the highest level of a trend, and the bottom, the lowest low of a trend. It is not that easy, but I will explain how this can be done, because it needs to be parallel. B and C, you see, if we connect them, they look like they could be connected with a straight line. Okay, so that's a bit of the tricky part, but I will show you in a chart how you can do that. But before we move on and actually apply Andrews Pitchfork, I would like to focus a bit on understanding how it works. Okay, so when an asset actually, okay, you know that the market is moving up, is moving down, is moving sideways. Okay, so when we are getting consecutive highs, okay, and consecutive lows, like if I would open my chart over here. Okay, so what I have over here, I have dollar index. Okay, I will zoom out a bit, and this is a daily chart. Let me get rid of this indications. You know what, I will keep it as it is over here. So, or okay, this is our dollar index, right? Okay, so if we observe our daily market, okay, our daily chart, we could spot that this was the bottom that we could see for the year, right? Okay, so we could have a node over here, and it keeps start rising and rising and rising and rising. Perfect. So we spotted a high over here, and a low over here, right? So if we connect those two, note the ray, and if we find the mid so if I place the beginning of the trend, the beginning of the trend was over here on the latest low, and the mid of this line by connecting B and C, it was here. Let me just be precise. In the mid, here it is, in the mid. Perfect. It gave me, okay, it gave me, just need to put two parallel lines from here. Perfect. And here. Can you see that, guys? This looks like an Andria's pitchfork, correct? So it's not ideal over here, but I'm trying to make you understand how very, very briefly works. I will show you more example and exactly how you can draw it and how you can spot it with more details. So don't worry about it. It's just to show you that the very first thing that you need to do, okay, when you're watching your chart and you have spot consecutive highs, okay, let's assume that we were back here in February and March, okay. I will zoom in on February and March because we had no clue where the dollar was about to go, right? So let's assume that we were here. Well, back then it was the beginning of the new year. Okay, even better. That was, and we have spotted that the bottom of at the beginning of the year there was a new bottom, right? A new bottom. Oops. So we put a note. This is the bottom, and then we saw that it start posting higher lows. Okay, and it was starting like appreciating. So we had a note that this is the bottom, okay? And eventually had a big drift. So another note over here, another note that we had the latest high and a big, big bottom as well. So connecting these two with this way. Okay, so it's okay, this is a daily chart, it's something that takes a lot of time, but I need to be precise. But it's just to give you an idea how it works. It's something that you might see in a 1 hour chart. It's something that you might see in a 4 hour chart. It might something that you might see in a daily, weekly, and etc. It's something that can apply anywhere. As long as you see something like that, as long as you spot a beginning of a trend, because you don't know if it's a beginning, right? You just put a note. Oh, there is a bottom over here, and I keep seeing the asset moving higher and higher and higher. So let's put a note, right? And then suddenly, so a sharp, steep, it needs to be sharp and a steep drift. So let's put another note, connecting, and put some trend lines on just to have them there. And eventually you'll start getting a confirmation whether this is a pitchfork or not. How you will get a confirmation? Because you see your asset not exiting this new range that has to be created. So as soon as you see that, you can enter the market in every rebound away from the bottom and in any reversal away from the top. Okay, so okay, this is a daily chart. It's something that it took months to be developed, but it's just to give you an idea how it works. Okay, so the same stands for a downtrend as well. Okay, so the tricky part is to it's not exactly tricky, but it's just to have in mind every day that if you spot a beginning of either an uptrend or a downtrend, put a note. If you see a sharp reversal, a sharp sharp fall or a sharp bounce, put a note as well, like I did over here. By the way, I wasn't prepared for showing you dollar index. It's just I tried to show you how just now how you can draw something like that, and it proven to be a very nice example. But nevertheless, yes, because I could either do that, I could miss this drop, and I could connect these two. Again, it would be a very good example. But yes, if you see something, just put a note, because it will in the future, it might in the future benefit you. But regardless of that, okay, take it step by step. As I said, identify or put a note that put a note that, oh, in dollar index I might have a possible trend, okay, or put a note that you had a very sharp drift, so latest high, latest low, okay, put some trend lines on and keep an eye on it. On the flip side, if you have identified possible market reversals, also put a note on, because it might help you. If you have spot, for example, over here, a breakout of your channel, okay, like here, put a note as well, because this might be the sign of a new downtrend. This didn't happen because in 2 days it get back to the channel, but always put a sign if you have seen your Andria's Pitchfork being fails, if you see your price exiting your Andria's Pitchfork, because it might be a possible market reversal. Okay. Also, Andria's Pitchfork helps you to trade within the channel, because it's a price channel indicator. So you can enter long every time. If you're in an uptrend, you can enter long every time that is retesting or rebounds away from the bottom line, or you can sell every time that it reverses away from the top line, right? If you are in an uptrend. Also can help you identify entry levels. If you have missed selling on the peak, on when it was retesting the upper line, then you can still enter short when it crossed the middle line. Or if it rebounded away from the bottom line, you can enter long if it crossed above your middle line. So it provides you multiple entry levels and exit levels, obviously, because you can use as your stop loss these lines, the middle one, the top one, and the bottom one. So these lines could act as support and resistance levels, and eventually used as your stop loss as well. Okay, so this is the benefit of using Andria's Pitchfork. And last but not least, it is highlighting possible market corrections. Now, what else? So just a bit of a briefing, or okay, no, we are here. Yes, a bit of a briefing. Ideal for trend traders, okay, because it's the base is that it can spot a trend, okay. Consisted by 3 parallel lines, as we have said, and these lines are called also trigger lines, okay, which are actually trend lines that originate from point 1, from this the very first point that we had, and intersect with the other points, okay. So the lower trigger line, this one, points connect sorry, I lost my words. So the lower line, if it can be proven that indeed is a nice Andria's Pitchfork because it connects the lows or the majority of the lows, okay, and the upper line the upper line connects the peaks of the potential channel. What else? And as I said, trading signals generated by these trigger lines, which are typically occur when the price retests or breaks the Pitchfork's upper or lower trend line. So any breakout above or below these lines, such as further upside or further downside, okay? So if we have a breakout of the middle line, okay, to the upside, it suggests a long position. If we have a breakout of the middle line to the downside, it suggests a short position. If we have breakout above below, if we have a rebound away from the lower parallel line, is a long position. If we have a reversal away from the upper line, that's a short position, and so on and so forth. So, yeah. So these are the two deviations. If we have in an upper line, and if we have a downtrend, upper trend and downtrend. This is a upper trend example. I think I have a downtrend example as well. So in an upper trend, we have a low level, a high level connected by another low level as well, and we have the draw of a natural frequent. In a downtrend, we have high because we are at the peak, then we have a low and a high again, and a new trend, a new Andria's Pitchfork is being developed. So what else I wanted to say? So basically the steps, okay, the steps, not the steps, okay, I'm taking a step backward. So the very first thing that you need to do is identify the starting point of an uptrend or a downtrend. It doesn't have to be, I mean, now on the big, it may be a few days afterwards, you are spotting the potential, the possible beginning of an uptrend or a downtrend. Then if you see a reaction high or a reaction low, like we did over here, a reaction high and a reaction low, put a note, because this might be your B and C, okay, your the potential pitchfork creation, okay. Then put this distance like I did, put a line on the bottom, on the beginning, on the starting point, and make sure that this line is on the mid, like I did. I zoom in also. Make sure that the trend line that you have put from the bottom of the channel, the bottom of the trend, is in the mid of the line, of this line, the line that connects the high and the low, okay? Make sure that you do that. This distance is very crucial because it's the width of the channel, the potential channel. So this is, if that happens, is when, if you see something like that and you connect them, is when you will start creating your pitchfork. And you select, make sure that you have, oops, by mistake, I moved it a bit. Okay. Make sure that you put an extension of your trend lines, and then try to use two more trend lines which are exactly parallel with the middle line, with the one begins at the top and the other one begins at the bottom, like I did. The way to make sure that they are parallel is just I put it over here, I make sure that it's parallel, right? And I put it back here, okay? Yeah, okay. Let's get back. I need to, can you, has been formed. How can you know that A has been formed? You don't know it. You put lines, you put notes, and you keep monitoring it. And you will confirm that indeed is a Andrew's pitchfork, because you're gonna see, like here, you wanna see the asset unable to exiting this range, right? You see that the price is moving within the range that you initially spotted. Okay. You don't know it. You just put some notes. Okay. Put some trend lines on and wait it to you wait to be confirmed. If it does, that's great for you. That's good news for you, because oops, what am I doing? Because that means that you have spotted an Andrews picture and you can enter the market anytime that it triggers your lines. Okay, it's homework. It's homework that it might eventually benefit you. So it's just homework. Okay, this is the bottom of the year. And the asset keep moving higher and higher. Okay, let's put a note here. Oh, there was a dramatic fall. Okay, let's another note, bam, bam. Let's wait. Will the price breaks below this trend line that I have put? Will it breaks above this trend line that I have put? If it's keep moving within this channel, then it's a channel. It's a channel, and you can enter anytime you see interacting with your channels, with your line, sorry. Yeah, so you see, validation of the fork will come as soon as you confirm a trend. How you confirm a trend? If your asset is keep posting higher highs and higher lows. So the validation of the curve of the trend over here, of the trend, there's an uptrend. It came few days afterwards. I mean, we spot this beginning, but it was keep posting higher highs, higher lows. So the validation really much came somewhere here, because it posted another high, several higher lows. So we knew that we are in an uptrend. What we didn't know is that we'll eventually confirm a pitchfork. Okay, but we knew that we are in an uptrend. We knew it because it was keep rising and posting higher highs and higher lows. So the very first thing that you need to confirm is the validation of a trend. Yes, it indeed is a trend. Now, I should validate my fork by checking whether it's an active trend. How you can check that it's an active trend? By keep monitoring the highs and the lows. So this is, as I said, it's just you do some homework. You just put note and keep monitoring day after day or hour after hour, depends on which time frame you are, and you make sure that it keep rising. Okay, this is how to validate that is in a trend. Now, once you spot a sharp rally and then a sharp drop like this one, you put another two nodes, this potential resistance and this potential support, and you put some parallel lines on those levels. Okay, so as soon as you do that, okay, and you see that your asset is keep moving higher within the fork, then you can trade either on the direction of the fork or every time, either you can trade on the direction of the fork or in the near term against the fork with stop loss the fork's trend lines. So you can, over here, for example, it went up, down, up, didn't break the middle line. It came back to the lower parallel line, but it didn't break it. So it rebounded higher. So it moved again on the direction of the fork. It moved again on the direction of this uptrend. Okay, so we could enter long with stop loss just slightly below the latest low or below or outside our lower line, and profit, initial profit at least, either at the latest high over here, can you see that? Or at the middle line. Price, like Bollinger's, price always tend to settle close to the median line, okay? So that could be your initial target. Now an example to the downside. The asset was posting some highs and then eventually had a very sharp decline. Can you see these consecutive 4-hour session candles? Very big bearish candles. So we could put a note, okay, that this is the high territory, right? Just a note. Then 1, 2, 3, 4, 5, a week afterwards, it bottomed over here and it started posting some consecutive up candles that posted this latest top over here. Oops. Okay, so let's put another note. A note on the point on the latest low over here and a point on the latest high over here. Okay, we saw that it will start moving down again. It didn't continue its uptrend. So we could connect our line, right? Connect the B with C, find the middle of it, and then draw a line from A to the mid of B and C and extend it. So let me try and do it. Where shall I do it? It's not always, you cannot always find something like that, but I will try. Fall, fall, fall. Oh, let's do that. Okay. I want a downtrend. I want a downtrend. Guys, you don't need to always try to find a pitchfork. If you see it is there, if not, just move on and continue with your setup. I mean, it's if it's you see it, bravo. If not, that's fine. Okay, let's see over here what's going on. We had a top. Okay, here started moving down, 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 down. It stopped somewhere here, as you can see. Okay, another line over here. Then it try to top. Oh, so this is okay. This is our latest. Okay, and here we have a high. Let's connect those lines. Might be not ideal, but trying to find an example. And here it is. Oops. So, and okay. Okay. Let's see. Oops. Parallel. Oops, it's not parallel. Parallel. No, that's not correct. Yeah, that's not correct because we had another latest low over here. So that could act as a better Andrew's pitchfork with the middle line. be here. Perfect. Is it parallel? Did I put it correctly? Yes, I did. Okay. Let's see, this should be parallel. There's another way to do that, easier. I will show you, but let me do it manually first, and then I will, oops, come on. So be exactly on the line. And then, oops, parallel. Here it is. It should be here. And I think I got it, didn't I? Okay. Pitchfork, or otherwise you can use this. Okay, no. Give me a second, guys. Another way to make your life a bit easier than what I do is draw this line by connecting BSC, okay? Draw this middle line, and then with the equivalent channel, you can, sorry, there is an easy way I'm trying to show you. Let me try and demonstrate an easier way to do that. And here it is. Okay, so, yep. Oops. Can you see this? Where is it? Can you see this little icon over here? This is Andrew's Pitchfork. So you connect with this one. These 3 parallel lines. This is the Andrew's Pitchfork line. So you can spot point 1, point 2, point 3, and boom. It does it for you. So I'm going to change the color. We'll make it green and thicker. So you can see it. Can you see that? In MT4, I'm not sure about MT5, but in MT4, there is an Andrews Pitchfork indicator. So only thing that you have to do is just select A, B, and C. So you do that. Bam, 1, 2, 3, and it does it for you. Do you get it? Yes, it's the same mentality, Paul, as linear regression channel. It's the same. Actually, it's not the same mentality. It has the same background mathematically, but the regression channel, the linear regression channel takes, if you see that, so it's that one, right? No, it's that one. Linear regression channel takes into consideration the highs and the lows of the whole. So as long as I move on, it's trying to find the average price, and it's deviating upper and lower line based on the median line of this period. It has the same mentality, yes, but it might have a bit of a different. Let's see, it might deviate slightly, but yes, it can. It has the same mathematical, if I could say, background behind it. It's still a channel. Let me just try and see. You see, so over here it's a bit different because it takes into consideration the linear regression channel calculates from here that I have started up to here that I have finished the average price of this period. So it's slightly different because it's taking into consideration the latest data. With Andrew's Pitchfork, we are taking the top, the latest bottom, and the sharp rally at the top, and we are using this as our beginning, as the start of our channel. Okay, So it's slightly different. It's two different tools. Okay, if you want to use both, there's no like right or wrong. So you can, but if you want to use both, then you should start it from B and C, not from A. Okay, so we'll give you an extra resistance line and an extra support line. But look at here, look at here. Over here, the linear regression channel, okay, could extend it. Whoop. See, you need to always, if you're gonna use the regression channel, you need to, the linear regression channel, therefore, you need to make sure that you have it up to date. So every day you need to make sure that you have it up to date, because if you don't have it up to date, and let's say that you have stopped it over here, right? And I will click array, so in order to be extended. If you have it over here, then you will say, okay, it's outside my regression channel, so the trend might start a reversal, might start a further drop. But that wasn't the case. There was a rebound. So it's a bit tricky. You need to make sure that that if you're using both, you make sure that they are in line. Okay, they agree. And if you're gonna use the regression channel, make sure that you day after day you are updating it like that. New high, new low, new middle line, and so that if you could use both in order to have two resistance areas, two middle lines, and two support areas. But make sure that your regression channel is up to date, okay? So over here, what we have is a downtrend example, down, 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 down. Eventually, it exited the pitchfork. You see, a sharp break outside the upper level. That was the very, very, very first indication that this downtrend might run out of steam. Confirmation came the next two sessions, which start extending higher again. So that was the time when you should know that this downtrend has ended, okay? And you should get rid of these lines, because a new one might need to take place. If you have a failure of the line, the upper line, a breakout, and further confirmation that the asset has reversed, then you're no longer gonna use this channel, because a new trend might be ready to be developed, okay? You get what I mean? Hopefully, yes. Always have in mind that every time that the asset exits the pitchfork, like here or here, you need to wait for confirmation. So what I mean, here, the next consecutive sessions is keep moving higher, okay? And over here, he had a small correction, but it's keep posting highs and highs. So there was a confirmation that the downtrend has over and an uptrend has started. In this example over here, though, it had a big sharp break above the upper line, but quickly it started turning down again, okay? So in this case, we had a breakout, but a failed one, because on spot it started consolidating and started dropping again. So what you could do in this condition, this situation, you can, if you spot a breakout of the upper line, okay, like here, you need to wait until you have a top. So here we have a jump, top over here, not 75.83, came lower, jump again, but failed to break that latest high and start consolidating. So you should connect your initial point, okay, with the beginning of the C level over here. So it's A. Let me draw it. So A, B, C, right? So you connect the A with the C and with this latest high. So let's call it D, okay? So this line provides you an extra resistance and a potential an indication of a potential trend reversal. So extra resistance, okay? So the assets start turning down again, right? Enter the pitchfork, quickly exit it, right? And then went back to the pitchfork. So this over here, okay, when it entered the pitchfork, and the next session it confirmed another session low, it could be a sell position. Now, why we have draw this extra line? Because we're gonna need it in the future. Because if at some point the price exits again, like here, exits again the pitchfork to the upside, okay, like here was, okay, very bullish candle, not like that. That one was a jump, but it was bearish. So over here was a solid, strong bullish candle, right? And a second one that it was a consecutive one, bullish as well. So that it was a sign of a reversal. But even if we're not sure whether it's a reversal or not, we could enter long with the resistance, with the target of this new line that we have drawn. Are you with me? Are you with me on this PDF? Yes, just upload it, okay? Are you with me for this example, guys? You see, bullish, bullish, so we could enter long because we have two consecutive bullish candles outside the pitchfork, and now the target, it could be that new trend line that we have set before by connecting A, C, and the latest new high, which I named D. Are you okay so far? So that could be a long resistance. And if that breaks, if that trend line breaks, then a second target could be set also at the latest high, the D level. Okay? So even if we have a possible change of pitchfork direction, we could still trade it. This is what this example tries to make you understand. So this is a nice trigger level. So pitchfork might fail here to control the price. The price was outside, overbought, quickly reversed back because it's an overbought condition. But this was afterwards used, few days afterwards, used as our target level. Okay. This is something that the linear regression channel DRPOL couldn't achieve. But it's not bad that you mentioned linear regression. You can use it as well if you want multiple support and resistance levels, as I said. Okay. That was pretty much it, guys. So that's it in regards to Andrew Pitchfork. I mean, I could show another example, which is a very old one. I found it online, to be honest, just to show you generally how you can use Andrew Pitchfork. Okay, I'm gonna show that as well. It's a stock chart. It's a very, very old one, but it doesn't matter. It's just to show you them in the thinking, let's say. Where is it? Here it is. So, okay, a bottom, up, 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 up. So we put a node, then we saw a lower low. Can you see? We had a bottom over here. Okay, let me draw it. We had a bottom over here, but then we got a lower low. So higher lows, higher lows, higher lows, and then eventually a lower low. So A. B is the highest level that we have so far. C is the latest low that we have so far. We either use our trend lines, or if you have in your MT4 the Andrew Pitchfork, just put it on. Okay, and okay, you can see that you can trade along with the Andrew Pitchfork, so you can go long. However, if you have noticed at any point that the asset went outside Andrew's Pitchfork, okay, don't panic. Don't panic at all, okay? Put a note, okay? Put a note. Wait to see whether the price will rebound and enter again the Andrew's Pitchfork. And as soon as it does, draw another line from A, connecting A, C, and this new low over here, D, okay? This D line, D level is always, it's something that you should put if your asset is outside Pitchfork, okay? So you have a new line. Where that does helps, it helps because you have a new support level. So once your asset exits again the Pitchfork, you can sell with target at this new line. And once it hits this line and rebounds, you can buy, okay, with target at the latest high. You see how beautiful this is? On the flip side, if you're in a downtrend, right? So our asset topped at this level, but it didn't manage to fail it, to break it, to extend higher. And instead we keep moving, we saw it moving lower, retesting this support level. So it was supported, it was retested over here, it was retested over here again, then rebounded and posted a new high. So we have the development of a new downtrend. It didn't last for long, but it was enough to help us spot when the uptrend will continue. So we spot the new uptrend, a revised uptrend, as soon as it exited the new Pitchfork. But even if you didn't spot this new Pitchfork, okay, by connecting these latest highs over here with a trend line, you will be able to see this breakout and the development of a new uptrend. Are we okay so far? I need to draw that better. So this is the latest low over here. This is the latest high, low. If I connect this like that, the middle should be somewhere here. I'm not sure whether I will be able to draw it, but oh, and sorry. Nevertheless, I think you're getting the meaning. Top parallel lines, parallel. I will try to keep it parallel. Parallel. Oh my God. Sorry. So something like that. Okay. Any questions, guys, before I call it a date? It's not something easy. It's not something that you can spot every single time. It's just something to have in mind, because if you see it, it's good to be able to know how to trade it. Okay. So just a quick recap of what we said over today. Under Pitchfork, it's a trending indicator which can be used to identify possible channels and possible price reversals, constructed by 3 lines, which can act as support and resistance levels, and entry levels, obviously. So support, resistance, entry points, stop losses as well. The middle line, have in mind that the price always tends to approach the middle line to get back to its middle line, because middle line is the average price basically. It can't be spotted in every single time frame, not only higher time frames, but it tends to be more accurate in higher time frames because we have a long term. We might have a long term possible trend. It could be combined with other indicators as well. And it's very useful if you combine it with the other trend lines in the case that you have spot an overbought condition or an oversold condition like the here and here. So it gives you a new support level, a new resistance level, which will help you identify new entry levels. There is no ideal one. It can be applied anywhere as long as you see everything that we have said, but it tends to be a bit more accurate in a higher time frame, such as daily and weekly, just because we have long-term trends, but it could be applied anywhere. Over here I have a 4-hour chart, you see, so it was just fine in a 4-hour chart as well. So it doesn't matter as long as you see it, dear Nathaniel. If you see it, it's there. If not, just keep on with what you are currently doing with your existing setup. Okay? Any further questions? So today I have shown an example of a daily chart. I have shown an example of a weekly chart. I have shown an example of 4-hour chart. So it can be applied anywhere. But the tricky part is to be able to see it, is to be able to do your homework, to put a note that, okay, here I might have the beginning of a trend. Oh, here I have a new high. Oh, here I have a new low, and put the trend lines and apply the Andria's Pitchfork line and keep monitoring it. That's the tricky part. The tricky part is to do your homework, is to monitor and identify these levels and apply the Pitchfork and start monitoring it. That's the tricky part. Okay? So if there are no further questions, I'm gonna call it a day, guys. I have put a PDF on the handout section, so feel free to download it. And in less than 24 hours, you're gonna get the recording as well. Okay? So thank you very much for attending. I know that it might not be something like easy, but I'm just trying to give you as much knowledge as I can because it will eventually help you, okay? Okay, thank you very much. Have a great day ahead. See you later. Bye-bye. Don't forget, tomorrow is a live analysis, so it's your session. We can discuss anything you want. Thanks. Bye-bye.